Good evening, all. Ira Epstein with your weekend edition of your metal market wrap-up. And this wrap-up is for Sunday evening. We're at 5:20 p.m. Central Time on the 22nd of January, 2023. You know, a couple of times now I've been waiting to put these out Sunday night. I don't know if I'd like to do that way or Saturday. My subscriber videos I put out already. They were out yesterday so that everybody had those. I've got to debate how I like this. And before I get too far, we're having our live webinar this coming Thursday. So if you're interested in it, if you move your cursor up to the top anytime up there, you'll be able to see an icon appear, give it a click, sign up. Away you go. By the way, you'll see in there an area where if you have a question, to click a link. It brings up a form on our website. Fill out what you want me to do. It's sent right to me, and it gives me a chance to do this. As I said, we're having this webinar coming on board for you on, I think it's the 26th. I'd love to see you there. So let's see what we can get going with you. It'll be at 12:30 p.m. Central Time. I open the chat room at 12:15. There's limited seating. We're already beyond, 60%? And when I put out the emails again tomorrow, it'll fill in very quick order. All right. So let's talk about what we've got here in the metals. You know, and basically we have a bull market that got up into the 1940 area, backed off a little bit in the gold. Okay. But we have a strong market in copper. We've got most of the metals still saying, hey, if you're going to have a situation where labor is so strong, how do you get a deep recession? Because I don't get it. I think that it's fantasy to think that the Fed is going to succeed with a 2% target rate to be hit anytime soon. I don't know what 5 years down the road, 4 years hold. If you're asking me anything in the next 24 months, I don't see it. Is it possible? Anything's possible, but why would it happen? We are looking at labor too strong. Too strong of labor keeps demand. People have money, they keep demand, and away you go. Do they pull back in certain things? Of course they do. Are they going to pull back this year on travel? I doubt it. Now that COVID is pretty much behind, the families want to go to Disneyland. They want to take trips to the parks. They want to do whatever. Airfare, you can see it's through the roof every time you look at a holiday, and the planes are running full. So those are all important things you got to take into account. Now, when we take a look at gold on a monthly basis, you've gone straight up. From here in the 1600 level, let's call it. In fact, we can come back here and let's see if I can bring up the price for us and get us right where we are, and I can't. So on a monthly basis, the lowest we got to 1620.280. We settled at 1640.70, and this is a monthly closing chart, as you can see, and you tell me what this market has done. So you're right back up. Already all weekend long, I am reading and getting stories coming into my email how we're going to $2,000 an ounce. I'm not saying you're not. As long as the dollar stays in the bear camp, and I am bearish, the dollar have been for a long time now, then I think that you keep the pressure on that. I think other currencies can come alive. I think that their banks won't have the resolve. I want to say that very clearly. They won't have the resolve of the Fed, and I know there's a big school out there that thinks the Fed won't have the resolve, and I'm not in that camp. I'm going to repeat. Fed Chair Powell, this is his last term. He will not go down with the Volcker necklace around him. He will not pull out of this too soon. He'd rather be too late. He's made that known. You don't have to buy into that theory until I see a reason down the road to change my opinion. That's my opinion. Could I change it come an example? If something real bad were to happen, of course, I'll be flexible. But do I see that right now? No. All I keep hearing from all the Fed members are they have the resolve and they're going to put the inflation genie back in the bottle. Okay, and everyone recognizes the strength in the labor market, and they're concerned about it, to the member. Okay, so when we look at it, here we are. The last time we had a big rally high, 1985, and obviously, if you get through that, you'd be saying, can they goose the market up higher? Even money number, $2,000 an ounce, if they can get it done. Here we get to see how the market came about without a swing line. And when you put the swing line on, you got higher lows and certainly higher highs. In fact, if you take a look We haven't had a lower low week since here at the end of November. Wow. This market just keeps going and making higher highs all the way through. You'll get one of these times soon where the market doesn't do that and begins a correction along there. But what's also happening is the 18-week average of closes in red is now making an attack. And it's going to have what number in front of it? The 100 average, 1803. If it crosses that, you have a classic bull setup in moving averages. You'll have the shortest term average, the 18-week over the 100. The 100 is already over the 200 in gray. So that would be bullish. Is the market rich in price here? It is. It's at the upper Bollinger Band. You rarely settle over it. Can you run against it? You can, especially if you're embedded, which you have. So what's the position I'm telling my clients? Long. Are they in it? Well, if they get my advice, my written updates and so on, yeah, they've got it. And do I know if they follow it? That's up to them. I don't manage people's money, but I can see the story. Did I tell people on this current run up to now, just this past week, take half profit? I did, because I'm looking for a pullback of sorts to buy in on a break again. If it keeps running, they got half their position. If it pulls back, they have buying power on the break. That's my thinking. Now, will we on a weekly chart get up to the 18-week average? You know, on the dailies, the silver's been losing to the gold, but not on the bigger picture. So it's more of a correction short term than it is a real fundamental change, because the weekly charts are still saying no, silver overall is still okay against the gold market. Not on a daily, but on the weekly. You're looking to see, is there going to be a turn in it? On the weekly, the battleground has been and continues to be the 100-week average of closes. Similar to the gold market, you have the 100, you have the 18-week at over the 200, the gray line, and now the question is, can it make a run for the 100? It's further away. It could. It's embedded. If you get the red line here to close under 79, yeah, then I'd have to take another look, but I don't think it's going to change that. I think that if we look back 6 months from now, I think we'll be in in fact, I think we'll stay in a bull market, an overall big bull market in the metal markets. I'm expecting that. Copper's obviously one of the markets I've been the most bullish, but all you need to do is look at the problems going on in Chile and Peru, the governments, what's going on, the street protests that are going on, the electric outages, the big mines having in Chile to set back and close some production because of the protests that are going on there and what's going on. And yet, China's back in the market, and they're the biggest consumer. So how much can they consume? Now, I've heard people give me stories, oh, no, if you're watching the London Metals Exchange, there's metal coming back into it, and they'll be just fine. Maybe. This chart is still bullish. On breaks, 416 will be a support zone. Staying over the black line, the upper Bollinger Band, I don't think it's going to do that. In the platinum market, keep your eye on the red line. If it closes under 79 this week, you're probably going to get a pullback that first is doing what it's trying to, which will be the 18-week average of closes. Remember, this is still Friday. We're not open tonight yet. Then I'll be looking to see what happens in let me come back to that, in fact, right here. Then I'll be looking to see what it does at the 18-week. It's fighting at the 100. And last, the dollar index. As long as it stays bearish, that's bullish the metal market. They're priced in metals. You know, Russia's about the only place saying, oh, we'll take currency of any type for our oil. Good. How many people are dealing with them? Very few. All right, so you're going to see they've got to cut their production back. There's a lot going on this year that you're going to be reading. This war is not going Russia's way. They're not losing it. They're just not winning it. So that's a big issue also. Now, I want to remind you again that we're having the webinar. You're invited. It's free. It's Thursday. I will open it up Central Time at 12:15 p.m. I begin sharply at 12:30 and I end 20 minutes later. It is nonstop fast like this. I'm reading questions that are coming in, but the smart people that are doing the spiders, ETFs, or stocks are writing me all those questions ahead of time. Why? I don't have 3,000 charts made up with all that. This isn't the Kramer show where I got a whole group and they're answering phone lines and they can create the charts and then he's just saying, let me bring this up. Not that his knowledge about him isn't good, but it's very difficult. I don't have that. But if you give me the charts ahead of time, I have them all set to go, and we just run right through them. And obviously, being a futures broker, I have all the futures charts ready to go. If you have questions, go here, move your cursor up to the top, give a click to the icon, you'll be signed in. It's that simple. I'm Ira Epstein. You have a great day. I'll see you tomorrow. That's Monday morning with my morning financial news markets. Take care.